The IRS just flipped the switch on a new AI weapon, and it's officially looking into your Venmo, Cash App, and Zelle history. If you thought your small transactions or side hustles were private, think again. In 2026, the taxman isn't a human anymore. It's an algorithm that never sleeps, scanning millions of data points every second. This isn't just about catching billionaires. The new IRS AI is specifically designed to flag unusual activity in middle-class accounts. Whether it's a rent payment labeled incorrectly or a few $100s from a freelance gig, if the AI sees a pattern, your account gets flagged for a silent audit. They are even using social media scraping to see if your lifestyle matches your reported income. Hey everyone, and welcome back to the channel. Today we're diving deep into a topic that's going to affect millions of us. The IRS is embracing artificial intelligence, and it has huge implications for your privacy, especially when it comes to apps like Venmo, Cash App, and PayPal. Stick around because understanding this could save you a lot of headaches down the line. What's changing? The IRS and AI. So, what exactly is the IRS doing? For years, the IRS has been looking for ways to crack down on tax evasion and boost compliance. They've used data analysis, but AI takes it to a whole new level. The IRS is investing in advanced AI tools to sift through massive amounts of financial data. Think of it like a super smart auditor that can connect dots you didn't even know existed. Visual. Graphic showing data streams flowing into an IRS building with an AI brain icon. Now, why is this a big deal for platforms like Venmo? Because these peer-to-peer payment apps have exploded in popularity. We use them for everything. Splitting dinner bills, paying friends back, even for small side hustles. And historically, many of these smaller transactions flew under the radar, but that's changing fast. The Venmo threshold, what you need to know. You might have heard about a change that took effect a couple of years ago related to tax reporting for third-party payment networks. Previously, platforms like Venmo and PayPal were only required to send a 1099K form to the IRS and to you if you received over $20,000 and made over 200 transactions in a year. That was a pretty high bar. Visual, split screen showing old threshold $20,000/200 transactions versus new potential threshold. But the American Rescue Plan Act of 2021 lowered that threshold significantly. Originally, it was supposed to drop to just $600 with no minimum number of transactions starting in the 2022 tax year. Now, there have been delays and adjustments, but the direction is clear. The IRS wants more visibility into these transactions. Even if the $600 threshold hasn't been fully implemented across the board for everyone yet, the IRS is already gearing up with AI to analyze data that is being reported, and to identify patterns that might indicate undeclared income. Here's the thing. The IRS isn't just waiting for the 1099K anymore. They're building systems to cross-reference information. So even if you're below the official reporting threshold for a 1099K, your activity might still be flagged if it looks suspicious. Have you ever received a 1099K form, or are you worried about your transaction data? Let me know in the comments below. How AI scans your transactions. Okay, so how does this AI actually work? Imagine the IRS AI as a digital detective. It's trained on vast data sets of financial information. It learns to identify anomalies or red flags. For example, if you're consistently receiving money from multiple different people and you're not clearly a business or a registered freelancer, the AI might flag that as potential unreported income. It can look at the frequency and volume of transactions, the types of descriptions used, though descriptions are often less reliable for AI, and compare this against known income patterns. The goal isn't necessarily to catch every single person splitting a pizza, but to identify larger patterns of undeclared income that used to be too difficult to track. Think about it. If you're getting paid $50 every week from 10 different people for what looks like services, that adds up fast. The AI is designed to spot that aggregation. Here's a crucial point. The AI isn't making the audit decisions. It's a tool to help human auditors focus their efforts more effectively. It points them towards potential issues. What about friends and family versus goods and services? This is where it gets tricky, right? Venmo, PayPal, and others have categories like friends and family versus goods and services. Payments marked goods and services are generally considered taxable business transactions. Payments to friends and family are typically not taxable unless they are structured to avoid taxes. The IRS AI is sophisticated enough to potentially look beyond these labels. If a payment is consistently marked friends and family, but involves the regular exchange of money for goods or services, or looks like disguised wages, the AI could flag it. It's about the substance of the transaction, not just the label you put on it. So, using Venmo for mom's birthday every time you pay your babysitter? That's the kind of pattern that could raise eyebrows. It's not about being sneaky. It's about understanding how the IRS perceives these digital flows. Visual, animation showing a label being peeled back to reveal the underlying transaction type. What are your thoughts on this? Do you think the IRS AI can accurately distinguish between a gift and payment for services? Share your opinions. What's the most common way you use Venmo or similar apps? Let us know in the comments. What constitutes income for tax purposes? This is fundamental. Not every dollar you receive is taxable income. Gifts, inheritances, and money you borrow are generally not taxable. However, income includes wages, tips, business earnings, rental income, and gains from selling assets. When it comes to Venmo, the key is why you receive the money. If you're selling crafts on the side, tutoring, doing freelance work, or even getting paid regularly for a gig economy job, those payments are likely taxable income, regardless of the app used. Splitting a restaurant bill? Usually not taxable. Receiving money from your roommate for your share of the rent? Not taxable. Getting paid by a client for a graphic design project? Taxable income. The AI helps the IRS identify transactions that look like taxable income but haven't been reported. Visual, flowchart. Received money via Venmo to reason for payment to business/service to report income. Here's the thing. The IRS guidance is clear, but the application to everyday P2P transactions can be confusing for many people. Okay, so how do we navigate this? First, know your transactions. Be mindful of how you're using these apps. If you're conducting business, even small scale, consider setting up a separate business account or using a dedicated business payment method. Second, keep good records. If you are earning income through these platforms, track it diligently. Use accounting software, a spreadsheet, or even a dedicated notebook. This will be crucial if the IRS ever questions your filings. Third, understand the thresholds. While the $600 threshold has seen adjustments, be aware that any transaction flagged as goods and services can be more easily scrutinized. If you're operating a business, expect to report all income regardless of the amount. Fourth, be honest. The goal isn't to trick the system. If you're earning money, report it. The AI is designed to catch the outliers and those deliberately trying to hide income. 1. No transactions. 2. Keep records. 3. Understand thresholds. 4. Be honest. The IRS isn't trying to audit everyone splitting groceries. They're targeting significant tax evasion. Type. Engagement prompt. Timestamp. 8:15 to 8:30. Content. What steps are you taking to keep your financial data private and compliant? Share your tips. Type. Main content. Timestamp. 8:30 to 9:30. Heading. The future of AI and tax enforcement. Content. This is just the beginning. As AI technology becomes more advanced and accessible, expect the IRS to leverage it even further. They're looking at AI for fraud detection, identifying tax shelters, and even predicting future compliance risks. The trend is towards greater data integration and more sophisticated analysis. So, what might seem like a niche issue now, AI and Venmo privacy, is part of a much larger shift in how financial compliance is monitored. It underscores the importance of understanding digital finance and tax obligations in the modern age. It's no longer just about filing your taxes once a year, it's about managing your financial footprint continuously. Here's the thing. Staying informed is your best defense. The more you understand these changes, the better equipped you'll be to manage your finances legally and confidently. Content. So what do you think about the IRS's move towards AI? Is it a necessary step for fairness or an invasion of privacy? The 2026 tax season is a minefield. If you want to know the specific steps to protect your digital privacy and avoid an AI audit, drop a comment saying privacy below. I'm putting together a guide on the top red flags this AI is looking for. Also, make sure to subscribe because the next leak from the Federal Reserve is coming and you don't want to miss what they have planned for your bank account next. Stay safe, stay informed. Let us know your thoughts in the comments below. If you found this video helpful, please give it a thumbs up, subscribe for more insights into personal finance and tech, and hit that notification bell so you don't miss our next video.